pleasure of being able to introduce our esteemed list of panelists here. So we're going to start off with Mr. Meredith. Ronald C. Meredith is president of the Financial Center. He has provided insurance and financial services to individuals and businesses throughout the Mid-South for over 25 years. In 1999, Mr. Meredith began the Financial Center of Tennessee, which is a full-service insurance agency. His insurance agency specializes in insurance and risk management services for the small and for the medium-sized companies. The company assists with the securing of insurance products ranging from general liability, property insurance, bonding of all types, and financial construction projects. Mr. Meredith is dedicated to providing quality insurance products and services, as well as providing various forms of other risk management services, as well as financial planning. As a successful minority business owner in this field, which has traditionally not been of choice for most African Americans, he has been able to work his way up from an insurance agent for someone else's business to becoming the president of his own firm. This has afforded Mr. Meredith some life as well as professional experiences, which he loves to share with the youth. Mr. Meredith is a very strong advocate for young people. He is an advocate for young people that are seeking to enter into the banking or the finance world. Mr. Meredith believes that if young people have the encouragement and the guidance, that they can make a powerful mark on the industry and the country. Let's give Mr. Meredith a hand. Next we have Ms. Sandra Bland Burgess. She is the risk manager for the city of Memphis. She is a graduate of the University of Memphis, and she has a major in insurance and risk management. She has over 25 years experience as well in this field, which is insurance and risk management. Her career started in Nationwide Insurance Company, and in that company she was a commercial underwriter. After that, she later came and went into claims department. There she handled personal as well as commercial claims. While she was there at Nationwide Insurance Company, Sandra's responsibilities involved re-underwriting, contract analysis, coverage interpretation, litigation supervision, as well as many other skills. She has been with the city of Memphis in the risk management department since 1997. Let's give Ms. Burgess a hand. Next we have Mr. Rick Powell. Mr. Powell is the principal of Harris, Madden, and Powell, and Mr. Powell has over 30 years experience in the insurance and the security bond and business. He is a graduate of the University of Alabama School of Business. He most recently celebrated his 29th wedding anniversary with his lovely wife, Katie. They have 3 children, Richard, Carolyn, and Dabney. He is also the founding director of Triumph Bank. He's also the director of Palmer Home for the Children, and he is an elder of Independent Presbyterian Church. Let's give Mr. Powell a round. Okay, lastly on our panel, we have Mr. George Hillard. Mr. George Hillard is the president and principal in the Memphis Independent Insurance Agency. This is Pete Mitchell and Associates Incorporated. He holds both a certified insurance counselor, which is a CIC, and a certified professional insurance agent, CIPA insurance designation. Hillard is a 1977 graduate of the University of Mississippi, Ole Miss. He was inducted into the Ole Miss Alumni Hall of Fame in 2009, and this was for his outstanding contributions to his profession, community, as well as the university. Hillard is the past president of the Memphis and Tennessee Associations of Professional Insurance Agents Insurance Association, which is PIA. The Tennessee State Association recognized him as an agent of the year. This was in 2008. This recognition that he received is the highest recognition of a member, acknowledging both his professional as well as his personal accomplishments. Hillard serves as State of Tennessee subject matter expert, consultant for Pearson VUE Insurance Testing and Development Company. He also serves on the Memphis Light, Gas, and Water External Advisory Board, and he's also a board of directors for the Memphis Regional Chambers Foundation. Hiller holds memberships in the Society of Insurance Counselors, American Insurance Marketing and Sales Society, National African American Insurance Association, as well as the Risk Management and Insurance Society of Mississippi Professional Chapter. Let's give Mr. Hiller a round of applause. Well, I'm sure that everyone here today is either has had questions at some point in time regarding security bonds and insurance. So we're going to start off, and just anyone that would like to answer the question, if you want to add some additional questions, you may. Let's start out with, what is a security bond? Surety bond.
Well, when you use the term surety bond, it's fairly broad. There are a lot of different types of bonds. Of course, bonds are different from insurance, as they're a financial guarantee. In the construction world, what typically a small or emerging contractor would run into would be license bonds, which are bonds that a government entity would require you to post to obtain a license. Those are typically in small amounts as far as the bond penalty or the bond amount, and relatively easy to obtain. It's more of a simple credit situation where you would evaluate credit, personal credit or your business credit. You have license bonds, then you have contract bonds, which is a total different world, where you will see many times in the job specifications of a job you're looking at, particularly public work. You will see requirements for bid bonds, which is a bond that secures your bid, and then a performance and payment bond, which is a bond that actually runs with your contractor, your subcontractor. It runs with your contract documents, and it secures your work. It guarantees your work. Again, it's the surety function is a financial guarantee function, not an insurance function. I'm talking too much, but I assume we're talking mostly construction folks. Is that correct?
Let's see a round of hands. Who's in the construction industry?
Okay, we're not. Okay. Then there's a whole other world of what would be deemed commercial surety that you might run into, which would be various types of bonds that would secure some sort of contract obligation that's not construction oriented. And there's a broad spectrum of those bonds also that do different things. That could be a requirement of your business to post. It could be anything from, we've got light, gas, and water. Light, gas, and water might require a bond for a utility deposit for a commercial customer. There's just a whole host of things that within running your business that you may be asked to or required to post a bond.
Does anyone else want to speak on that or the other aspect of the non-construction?
I want to speak on it from this aspect, and I'm looking at the faces in the crowd here. How do I get qualified for a bond? That may be one of the first ones. When clients come to me, and I'm sure same thing with Mr. Hiller and Mr. Powell, I recommend my clients, say for example, there's a 75 or for round numbers, $100,000 job that you want to bid on, and you've never been bonded. As cruel as it sounds, don't apply for that particular job, because the bond company is going to want to know, have you ever worked on a job that long? They're going to want to know, have you done the payroll for a job that long? What's your work history? Well, if everybody come to me and say, well, I know I can do that job, that has absolutely nothing to do with the underwriter that's sitting in New York or sitting wherever, looking at your credit history, 680, don't have a 680, you need to find somebody else. Think about something else. Years ago, obtaining a bond was real easy. If you could follow the mirror, they would write you a certain type of bond. But now, since the financial market has changed, they're requiring a certain credit score, assets. People get bonds confused with insurance. A bond company says, if you get a bond for $100,000 and you default on that particular job, the bond company needs to be able to get $100,000 back from you within 90 days. So if you run into an insurance agent, say, oh, well, they'll write on there that you got $200,000 in equity in your house, you only got 15, and they only got, they inflate your numbers. And if something goes wrong, in the perfect world, we say, I'm gonna do this job, no problems at all, everything gonna work out right. I got a client that's blown up my phone very now, where he didn't do what he was supposed to do, went in and sprayed an apartment, and the thing caught on fire. Well, now he called me when I said, ain't nothing I can do for you. So same thing happens with a bond. And if you're working on a large job where you have employees, you can't control what I do. You can tell me what to do, but you can't control what I do, and that just may be the very thing that triggers your bond. And you have bond companies want to know, are you paying your supply? So there's a lot more involved in just calling up an insurance agent 2 weeks before the bond is due, which is not, Ms. Burgess can tell you, doesn't really work like that. You can't go and get the job and then call up and say, but I need this bond or this bid bond tomorrow. It's not gonna happen that way. So I'm saying all of that pre-story with saying, establish a relationship with an insurance agency a year out. And if you want to go after a $100,000 bond, start with a $10,000, even though the job may not require a bond. Develop a relationship with a bond company. Get a $10,000 bond. And then when you get the $10,000 bond, pay it off. Pay on it, do the job, show the bond company, because the bond company looks at your bonding ability like a credit report. Everything is on history. Can't go on goodwill and so forth. So you look at it and say, I got a $10,000 bond with you. Bond company say, good job. Well, I'm coming back now for a $20,000 bond. Okay, good job. We're trusting you a little bit more. It's kind of like dating. And that's what you want to do with your bond company, your bond agent. Your bond agent, he's going to go back for you, whether it's myself or Mr. Hilliard. You want to develop the relationship with the bond company, and you have to become bondable. And so there are a lot of factors. So I don't want people to get the notion that, okay, well, you get my card or you get one of the other guy's card, and then you call and say, well, I need a bond Thursday. I can be nice to you, take your information, and send it in, but it really is not going to happen. So bonding is a long-term relationship. There are many different types of bonds, but at the end of the day, all of that's moot point if you don't have a relationship with a bond company, because you have to know what the company requires. A good credit score, no IRS tax liens. If you got IRS tax lien, you can just, I'm being frank, give it up, because they're going to find it. If you have any type of outstanding debt that you're not addressing, so you got to, over a year time, become bondable to where when you go after these big jobs, we won't be able to say the city of Memphis giving the job to a select few, and they're doing this and they're doing that. You have to put yourself in the position so when the opportunity comes, you can walk through the door. So that's my say. And I'll probably be quiet the rest of it.
I know Ron just did an excellent job in explaining to them. They really wanted us to emphasize this bonding thing. And one of the reasons that the first person came was bonding, because this is the #1 item that stagnates businesses, especially the small minority type business. That's why I'm on the Memphis Light, Gas and Water External Board committee, because the cities like entities like Memphis Light, Gas and Water, the airport, all these Shelby County government, all of them are trying to find ways to overcome the barrier that a lot of minority-owned small businesses experience. And bonding is the number one barrier because, just what has been said by Mr. Powell and Meredith, is that it's a major item, and this is why she started off with that question. That's the number one item that stagnates small businesses, is the inability to get bonded. And one of the main reasons is the lack of education, understanding of how the process, how to go about doing it, what the underwriters are looking for, and those kind of things. And this is more about educating. And I think this is what all these entities are trying to do, because this has been a major issue for years with small businesses. It's bonding. It's the surety bond, the performance bond, and the payment bond that we're having issues and problems with. So it's been a cycle of people not able to move forward with their business, to grow their business because of this particular item.
Ms. Burgess, could you?
I have one question. Okay, now in the African American community, even though we're having a problem with getting bonding, how is that affecting other ethnic groups that are coming in and being able to open up businesses? Do they need all these bondings and things of that nature?
Do you mean us?
Ms. Burgess, do you want?
Well, actually, the bonding part, I don't really deal a whole lot with bonding. I told them over the phone, but the insurance part is what I deal with. Normally, our city attorney's office deal with the bonding, but a lot of them are performance bonds that
Sure,
we
that's
deal
what
with
we-
as
that's what we
well.
talked about.
Yeah, but on the other hand, when I worked for Nationwide Insurance Company, I can tell you what we did. We would order D&B reports just to get a credit history, to see what type of, how you pay your bills and things like that. That had something to do with it as well. So, I mean,
Sure, Mr. Powell.
If we're addressing the surety bond issue with construction, with contractors, or people contracting with a government entity, and in many cases, the job specifications that you bid by, the RFPs, many times it's statutory requirements. Bonds are required, and bonds, those things are colorblind. It doesn't matter. So those are required. They're a pre-qualification. What the city of Memphis does, they put out a request for bids, and in that there's certain pre-qualification requirements. Like you have to have a contractor's license of a certain type. You have to provide a bond, a performance bond, or proof that you can provide a performance bond. The city doesn't want to go out and have to pre-qualify all the people that would bid on their project. They put certain requirements within their bid that they know if this company, if this individual comes to the table and they can meet those requirements, they're qualified to work for us. So that takes any type of political maneuvering or whatnot out of the equation. You're either qualified or you're not. The surety business and the insurance business, the insurance companies are in business to make money. They're capitalists. And in the bonding business, what you're doing is that you're paying a surety company a fee. You're renting their capital because they're providing the guarantee, much like dealing with a bank. You're paying them a fee. They're extending their credit to you to secure your work, and so they want to have they want to know that they're not going to have to step up and pay because they're in business to make money also.
Good.
Another thing, totally correct. It's not about cover. It's all about opportunities and things that sometimes, especially small businesses, probably first generation businesses, they hadn't established themselves, or they not as informed about what's necessary. These are laws. The Tennessee Miller Act is saying that when you go out and bid your contract and something dealing with the public, funds and all those kind of things, it's mandated. So it's not about cover. It's about people getting themselves in a position, and a lot of times, and me being an African American business owner, I'm a second generation, but we have a lot of first generation businesses in our community especially, just don't have the education. They don't understand a lot of things about what's going on, what's taking place until they get themselves in a position. So it's all about education. It's not about color. It's about not being lack of education on what it takes to move your business to another level. And those are the barriers that there, because sometimes we don't realize it until we get to that point.
Yeah, and what I was looking at is, even with the mom and pop stores that started out in the African American community, now it's more Asian and Indonesian and all of that. And so they're going not only just expanding to one store, it's like 1 or 2 or 3 or 4 all in the African American community.
It's just like the bank. It's all about green. All about collateral. It is not about color. Same thing the bank.
Okay.
Yes.
He said about the tax lien, but you just need it as a lien, and it's not if you're making your payments like you're supposed to, because you know, sometimes you have a tax, you owe your taxes, and you may not be able to pay the whole thing, but you're making your taxes, you're paying tax on time, they put no lien on anything, you just have made a payment when you're paying on time.
As long as it's not a tax lien, you can
Okay.
owe taxes.
Okay.
That's one thing.
I just want to
As
make
long as it's
sure.
not showing up on your credit report, it's a
Okay.
tax lien.
Okay.
Yes.
Let's say if I do welding fabricating and I kind of want to get out of the general area and move up, do I, to bid on jobs for the city or so? How do I develop a relationship or so? So I won't just go out and say, okay, well, I want to apply for this or bid on this. And, they ask me, do you have the qualifications? I don't. How do I establish that relationship? Because you said maybe like a year and a half or so like that. Because I'm starting out, but I want to, I just kind of want to move up from the bracket. So,
What's
of
the
course,
process?
yeah.
Well, the process essentially is, first step, making contact with an insurance agent or insurance broker of your choice. And letting them know what you want to do. Fill out the application. It doesn't hurt to fill out the application. Send it in to the bond company to find out where you stand.
Right.
And then after you find out where you stand, then that gives you the ability to plan your business.
Right.
Say the bond company comes back and says, well, we'll insure them or provide them a bond for $50,000. Then you know how to plan. And then you can go after a job that's up to $50,000. You wouldn't be wasting your time going through the trouble of attending the meetings, going through the RFP on a $100,000 job when you know your job. It's kind of like getting pre-approved for a car.
Right.
Go sit down, talk to the insurance broker, get pre-qualified so you understand where you're at, and then you know what you need to do. And not only that, most importantly, you can plan for the cost of the bond, because there is a cost, and that can range depending on your credit anywhere from 1% to up to 5%. It just depends, and so this gives you the ability to better plan your business.
Right.
Because great, I can get qualified, but I can't afford the bond.
Right.
So that kills me from there. So again, that's the reason why I said a year out. It doesn't mean that you got to wait a year, but it gives you time to plan your business. And walk your steps. Because, again, all I'm doing is filling out the paperwork, but you didn't actually want to go out and work it.
Yes, sir. Thanks.
Yes, ma'am.
I'm a technology company, and we do security services for families and businesses. I'm not ready to be in the government space, but we've been asked to be in the government space. I don't feel ready because I don't know what the requirements are, and I'm kind of anal. I like to know all my ins and outs before I put myself out there. The other thing is you keep referencing credit. We are an incorporated company. We've only been around 2 years, but we actually have had money on the books for about a year. We don't have a Dun & Bradstreet, whatever number yet, but we have a considerable amount of income, revenues that come in every year. So I'm saying that as, do you still look at me as the CEO and owner of this company? Do you still look at my credit, which is fine, or are you looking at the company's credit?
Are you referring to the bonding or the insurance part of it?
Well, I don't know. I would have to get with whoever, one of you people.
Well-
I would probably
Maybe we should
exclude
start
the
with what-
woman.
Well, let's talk about, you need to have your insurance in place.
We have
And I think the
insurance.
young man here,
Yeah,
I would
I
say,
think we come from the
We
same.
have
if
insurance.
you have all your insurance in place and you're trying to maybe get yourself in position to get bonded, it's gonna be based on your company as well as you.
We have business insurance, but understand this, that I don't know if there are additional insurances or additional, we were approached by the juvenile court system. And so, as I said, I'm not ready. And so I'm trying to figure out at this stage of the game, take my time to figure this process out before we can actually say, yes, we want to, or willing to as a company, to work with this entity, because it's our decision. We may not want to do that.
Well, if you
Go
have your insurance program in place, a good insurance
ahead. We
program,
do.
I would suggest you do start thinking about looking at getting pre-approved, or even looking at maybe your bonding capacity, those kind of things. And what's normally happens, we wait too late, because that's probably gonna be some opportunities that come up that you might need a performance bond, or at least sometimes service type bonds, because the government entities now used to not require bonds on service, but now they begin to. So I think you need to get familiar with the process of what's going on in your industry. Okay, Sandra.
Yes, ma'am.
I want you all to keep in mind too, it depends on what type of business you're in and the requirements for whomever you're trying to do business for, if they require you to have a bond.
Okay.
It just depends. So I don't think, honestly, if they come to you all first, they still may not know exactly what they need,
Sure,
right?
understand
They need
the
to check with whomever you're trying to do business will see the prerequisites to see. Now, what I deal with are basically your insurance requirements, which will be your commercial general liability, your business autos, your workers' comp, your professional liability, umbrella, things like that. That's what I deal with. And we have a lot of things that go south on that. We have the purchasing agent in here too with the city, and we have a pretty good relationship because we're constantly talking back and forth and trying to get the things that we need for the city. And from time to time, I'm not going to hold you long, but from time to time we hear, okay, you all are asking too much, you shouldn't be requiring all this, and then we ask to be named as additional insured. That's another whole week's matter, that I won't get into today. But I'll stop him because she has her hand up.
Thank you.
I just want to stay recognized that he still has something to say.
No, I was finished.
Okay. My question is, I've gotten pre-approved on my bonding, but, I keep hearing you all say, you don't want to run out of time. And I know that there are requirements when you're, looking at the prerequisites for a bid. How long do you need to have your bond and vote note before you even submit your request, for the bid? So I know that I'm pre-approved. I know, my range, but when do I actually get that bond? Do I wait until
I'm not gonna talk on them, let him talk on it, but I'm gonna say congratulations.
Okay.
That's a major milestone.
Yeah.
Your guys can talk on that. I can talk all day on that. You, congratulations. You guys might wanna speak on that.
Meredith, would you like to address the question?
The bond, you normally have to purchase the bond after you get the contract. So to bid on the job, if it's with MLGNW, City of Memphis, or whoever, they may require you to have a bid bond. The bid bond normally costs some companies as much as maybe $200, $250, maybe a little bit less. But since you've been pre-approved, now, and you know your range, now bid on jobs within that range, or you can go after jobs within that range. And then after you go after jobs, they may say, when you read the RFP, it may say, well, you need a bid bond in X number of dollars, X number of % of the contract. Then at that point in time, you call the bond company or the agent, say, I need a bid bond letter for $10,000. He'll tell you it costs X number of dollars. He'll fire off the letter to you. Then you enclose the bid bond letter in with your bid. And then after you go to the final bid meeting or whatever, and they award you the contract. At that point in time, then you call him back and say, hey, congratulations, we fixing to get ready to take a trip to the Bahamas. Oh, no, by the way, we need to get a bond. And then at that point in time, then that's when you purchase the bond, pay him the fee. Then you take the bond to entity that you've been awarded the contract to, and then you go to work. So to answer the question, now that you know your capacity, you go after the job, and then you enclose the bid bond letter with your bid, and then after you're awarded the contract, then that's when you have, because now it's smooth sailing. Since you've already been pre-approved, you're gonna have people contacting you, because once you get the various designations and you are bondable, you have so much vision, you don't know, because that's the problem. People
Amen.
can't get bonded.
Thank you so much.
Mr. Hiller, could you address, let's say, it's a person that's in construction. They see an opportunity, or RFP is out, it's too large for them due to the bonding that they have to have. Could you speak of them going and looking for a person to another, maybe it's a majority company that they could joint venture with, who's responsible for the bond, and how they may be able to still go after that contract without the bond?
That's a great thing, and you just used the word joint venture. That's the key thing, and my company been in business for 39 years. Pete Mitchell started, and he's been doing that ever since we started with some of the larger brokers, et cetera. Joint venture is such a great thing to do, especially when you're small and you find, that's what a lot of companies are doing, and like a lot of the major, we call the contractors, a lot of your small businesses are subcontractors anyway. And so if you see an opportunity and it's too big for you, you probably want to find what we call somebody that has the expertise and has the capacity, have all the things that they need, and you guys become, well, we call it joint venture, but sometimes we call it partnership, but it's more of a joint type venture type thing. Or you can have a relationship where you have the contractor and you the subcontractor. It all depends on how the relationship, how you want to form that relationship. But joint venturing or forming a relationship with a contractor, that is the best thing you could do, especially if you're smaller. Most of the time you see a large construction going on, you know they don't have one contractor anyway. Just like when you're doing the arena, when it's on arena, Cooks Convention Center, all those places, you only have one contractor, everybody else is sub. But the sub and joint venture is a little different. But I still see it as an opportunity for anybody that cannot take on that capacity by themselves. Whether you're doing a sub or you're doing joint venture. The joint venture is always, you have a little bit more control if you're joint venture versus being a subcontractor. But always find somebody out there that maybe have the capacity that you don't. And you have to be a good partner. You still have to have your game together. You still need the bond, and you still need the good insurance program and all those kind of things. That's what I would encourage. That's about the only way you're going to take your business to another level. And I'm sure you got something to say on it, because that's all you guys pretty much did.
Well, I would to small and emerging contractors, I would really caution you in getting involved in joint ventures, particularly if the scripture tells us something about not being evenly yoked. And unfortunately, I've seen too many horror stories where a small contractor, a minority contractor, they're like a kid in the candy store. Their eyes are big, and they think they're going to get something, and what they're going to do is get sick. And they get, quite honestly, taken advantage of because they aren't evenly yoked, and they let their emotions and don't listen to sound counsel and good business advice. So I would go into any type of joint venture arrangement very cautiously and making sure, as I would say, that everyone's heart's in the same place, and making sure there's some protection for you. Because again, we can talk all day about horror stories where folks have been taken advantage of in this city. So I would be very, very cautious about that. Now, we're setting in some buildings that we were involved in several years ago, where a local, longtime minority contractor and was a joint venture partner in the construction of these buildings, and it turned out great. And so that would be a success story. So it is there, but at the same time, the two contractors were somewhat evenly yoked. And the minority contractor was not totally at the mercy of the general contractor.
Can I follow on that? And he's so right. You have to be very, very careful. That's why I said you have to have your own, your adversary stuff together. I've seen horror stories, especially at Chevy County Airport. I mean, there's a lot of horror stories out there, simply because, as what he just said. So you have to manage your business. You have to get the legal counsel. You have to do all those kind of things. Don't say I'm gonna just go for the ride. That's what's really gonna get you in trouble. That's why you need to have all your things in order. But he's absolutely right.
As it relates to, then we're gonna segue into insurance. As it relates to joint venturing, we speak of, yes, it's something great to do it, but with caution.
Sure.
The ones that are thinking, well, maybe this could be an opportunity for me to do it. Should I do it? Should I not? Could you speak on the things that you should, when you say you're not evenly yoked? So a person, they will be wanting to do a joint venture because they're already, they don't feel like they're able to fulfill the contract solely because of other reasons, and it may be the bonding. What are some things that they should look out for so that they don't have that horror story?
I'm gonna use to Ron or whoever, but I wanna make sure when we're talking about that's joint venturing and you serving as a subcontractor. Now, those are two different things. Joint venture is when you guys partner up and pretty much you guys sort of have some of the same, it depends on how you want to distribute responsibility. You guys are doing it jointly. Now, if you're doing it as a subcontractor versus contractor, there's a different relationship there. So the joint venture, those two different things now. Let's be aware of that. But I'm gonna yield to you.
So let me ask you something about that also. When you're saying that, okay, I may be the contractor, general contractor, but then I don't have the money to get, just say a janitorial service. I have a small.
You're the general?
I would be the general contractor.
Okay.
But I would have a subcontractor who has the clout, the money, everything they need to back my business. They can't bid on the bid for the city.
Because they need the minority participation.
But I'm the minority, I'm the majority that can get the contract. But then they'll supply me with the people I need, and they'll supply me with everything else I need that I just send it on out. So when I heard that red flag, you'll help me.
I don't like that arrangement.
Right.
That's what I'm getting. That's what I'm saying. I'll help you, whatever it is that you need help. But I can't get the contract, but you can. So since I'm a double minority, I can get it.
You go to jail for that.
But my thing is, a lot of times, by me being a customer service,
That's what
I
you're
know
talking
when
about
I
a
hear
minute
red
ago.
flags.
That's not where you want to go.
I understand that, but what I'm saying is, by me being a
People do it
customer
all the time.
service, I know when I hear inflections in.
Find that person, y'all can sort of do a joint venture. You find, you don't want to try to reverse this.
Right.
Right, and in a way, I knew then it was gonna be a reverse.
No, okay, there you go.
Yeah. Yes, sir.
May I just address that? I think this gentleman over here made a good point. Depending on the government entity or who you're bidding to, you need to be very, very careful, particularly with the federal government.
Yeah.
Yes.
The federal government has some very strict regs and laws that have to do with how they contract and who they contract with, and you don't want to get into a situation where you have presented something to the federal government that's fraudulent. They, the feds look very, very poorly on being treated that way. So a lot of it depends on who you're attempting to contract with.
Sure.
There are ways to work through things, but again, you've got to be very cautious. You've got to understand who you're bidding to, the laws that would govern the contracting.
Would that apply in the private sector more so?
Well, the private sector is, it's a little more the Wild West there. It's a little different, and you wouldn't have to worry about those federal contract regulations.
Okay.
But you need to protect yourself.
Because I would have 2 years experience in janitorial work, and they would have 35.
Remember what the referee in the boxing match, the last thing he tells the two boxers, Gentlemen, protect yourself at all times.
At all times.
And that's what you need to do in business.
Yeah.
Not that business, is always adversarial, but particularly if you're in a weakened position, you need to watch out for yourself. Again, you need to make sure, and this maybe sound corny, everybody's heart's in the right place.
Yeah,
Because you bring something to the table, but it's not necessarily capital.
Right,
Right.
It's not something that they can see on a balance sheet.
right.
And somewhere through that negotiation, you need to be given credit for what you bring to the table.
Okay.
And many times, maybe we don't have the backbone to stand up and realize what
Or
we are.
education, like you said, once you have the education and knowledge is power. But my thing is, a lot of times we're like, okay, well, I'll just go with it. Before you know it, you'll be done succumb to the sharks. And like I said, in business, there are no friendly sharks in business.
In business, the only thing that's ruling is capital. You put yourself in the position. It sounds good. It's like you getting a Walmart contract. Everybody want a contract with Walmart.
Right.
After they get a contract with Walmart, everybody want to get out of their contract with Walmart. Simply because they're not in the financial position to be 90-day netted. You will be in the position and at the mercy of those individuals because you're primed by name only. And being primed by name only does not put you in the position to where when it's time for you to pay your bills, they can tell you it's coming. Because the check may come in your name, the check may come in both names. You're not in the position legally because now all of a sudden, what if they hold your money? You got to now come to them begging, well, when y'all gonna give me my money? When y'all gonna do this? And why I don't have this? It's coming. But when you gonna do this? When you gonna do that? You need to have the position. Everybody needs to have an attorney.
Right.
So when you don't get paid, the attorney can fight your battle. And you won't be in the position. It sounds good. I don't know how much it is. It sounds whether it's private or government. I'm not saying whether you fraudulent or not. Not you, but you're just not in the position to handle the money. And the money is where, but let things go south. Watch and see how fast that noose get hung around your neck because again, you prime.
Yeah.
Thank you. Thank you all. Thank you all.
Ms. Burgess, could you tell us exactly, for some of those that may not know, we're talking about bonds. Let's segue into insurance. What is the difference between the two, and why does a business need to have insurance?
Businesses need to have insurance because that part picks up the liability. A lot of these bonds, pretty much like they stated, the financial part, let's say performance bond, that's something if you don't finish the job, that's when that performance bond steps in, but only for what you don't finish, nothing else. So insurance is okay for commercial general liability. You need that because you could be responsible for a third party for anything that could happen. And I know, me being in risk management, we think of some of the strangest things, but general liability, it picks up your personal and advertising injury. You say something to somebody or somebody's offended, they can file a suit, a claim against you concerning that. A product that you're working on, you're repairing something, they can put a claim in for that, whatever business you have. I said products, occurrence, anything, you're on their premises and something happens, the occurrence will be on your premises though. Let's say somebody slip and fall while they're at your business, place of business. Now, it may not be your fault, but guess what? You're gonna get a claim, and that claim could turn into a lawsuit. That's why you need those type of coverage. You need commercial general liability. Business auto. You need business auto because if you're doing business, especially contractors, you're back and forth to the site. And if anytime you hit somebody or whatever, they find out, okay, I was doing this job for the city. Guess what? Red flag came up. They're gonna put a claim against you and the city of Memphis. But guess what? Only thing the city of Memphis did is to hire you to do a job. That right there, we're into a claim or a complaint. So therefore, we request you all to name us as an additional insurer. And what that does, it shouldn't add any of our negligence to what we do. But while you all are doing business for the city and something happens and they find out, well, guess what? They're gonna put a claim, place a claim against whatever contractor you are, and then the city of Memphis. Guess what? City of Memphis wants to say, look, we hired you to do this job. but we're tendering our defense over to you, and it will be taken care of as long as we are a legitimate additional insured. And that's with a form, an endorsement that is attached to the policy, which sometimes, a lot of times, we refer to a certificate of insurance. Are any of you all familiar with certificate of insurance? Okay, good. Certificate of insurance, if you're familiar with it, at the top right part of it, or used to be, it may be on that first line now, this is a matter of information only. So if you just get a certificate of insurance, it's just a snapshot of what coverage you have, but guess what? If you don't get the additional insured endorsement attached to the COI, it's not worth the paper it's written on. At least the additional insured endorsement will say, you know, your name, but I do know a lot of you all have the blanket additional insured now. And the way that reads is you are an additional insured pursuant to a written contract. You know, so we ask for some of that information. But, and a lot of times we have to make sure that certificate of insurance is valid, because we all know you can get a certificate of insurance today, tomorrow, that policy can cancel for non-pay, or somehow they find out something went wrong, you false information or whatever, then it's canceled. But we need to get some type of information to say, okay, this policy has been canceled, so we know what's going on, meaning the city of Memphis. So that's why it's imperative that you carry insurance. We ask for, I tell you what, there's another bond, fidelity bond. That's crime, that's like the employee doing some stealing. That's a bond. So, you know, like they say, there are so many different bonds. And I don't want to get too far in it because it's just so much when you talk about insurance. But there's crime coverage, and that goes along with the fidelity bond or employee dishonesty. That goes, let's say you hire a janitorial service. You know, like I think you said, well, when we hire a janitorial service, we look for them to carry commercial general liability, business auto, and workers' comp if they have 5 or more employees. And then we ask for crime, because while you're on our premises, anything could happen. You know, you're doing things to our facility, and sometimes we're not always around. So we want to make sure you have some type of crime coverage, you know, to pick up anything that, to reimburse us, you know. So that's why we ask for those coverages. That's it. Oh, and sometimes umbrella coverage, depending on the nature of business, what you're doing. You know, sometimes you have things going on that you really have to request higher limits. And when I say higher limits, more than just $1 million, because the city's general requirements are $1 million commercial general liability, $1 million business auto, workers' comp is just a statutory $500,000 the policy occurrence form, and then it's there's a business auto, $1 million. Those are just the common ones. But depending on what type of business you're in, we may have to require some professional liability. We have architects, you know, and I think I've seen you all on a lot of the architects, Harris and Maddie and Powell, I think at the bottom. And we did a study on that, and it may not be if you all any of them in here today, but on those, we require higher limits, you know. So it just depends on what type of business you're in, and when I say exposure, the hazard, the likelihood that you may have a loss, depending on what type of business you do. So that's the way we look at the insurance requirements and what we require. But as I say, for a basis, it's commercial general liability, it's business auto, and it's workers' comp are normally the general ones that we require.
And what about the cost?
Now, the cost would have to go to the agents, but let me say this. It's not a major deal breaker to go from 1 million to 2 million. I'm not in the insurance field as I was before, and plus you just don't have those figures in your mind. It's something that's with me being an underwriter, we would have some information available to us to let us have an idea of what coverage, you know, what the cost was for certain coverages. But let me just give you this example. Contractors, and let's say you're a roofer, that will be a little more expensive than just your clerical. You know, so just to give you an idea, and I know I did 2 extremes, but that's just to give you an idea how the rate works.
Yes, Mr. Powell.
Just to address a couple of things. First, the cost factor. We've got a welder. Who's our welder?
Right here.
All right. Do you price work? Do you
Yes, sir.
use acetylene and oxygen?
Oh, yeah, for material.
You price the cost of your material
Almost there.
when you price a job.
Right.
When you are pricing a job to the city of Memphis, the insurance is a job requirement. It's not optional. It's just like your materials. It's a job cost. And so, other than getting hung up, you need to understand your costs and how the costs are developed. But it's a job cost. You've got to include it.
Yeah, you're right, and that's different from like just doing jobs with regular customers and somebody say, man, I could do this for that. You say, well, I can't afford to do it, you know, because all my factors that I have to add in, you know, on top of labor. So, you know, I don't want to offend you, but you're going to offend me, you know. So that's why I said, well, it's better that I kind of try to move up, because I've seen so many guys or so contractors, so including my dad. My dad's in business. They kind of stay in that particular area, and after a while, you know, you're not satisfied with it. And so you either stay in that same area or you move up and just deal with, you know, all the other requirements. You have the workability, you can do it, you have the skill and the craft to do it, but it's not too many of us decide to say, hey, look, let's just go ahead and move it up.
It's very common to see a good tradesman, a good tradesman want to do that, do more work. But you can be a great welder, but you might need to brush up on your business skills.
Right.
Something very common that I've seen over the years, particularly with a small emerging type contractor who's trying to move up, we'll sit down and look at his takeoff, at how he prices his work. And one of the questions I'll always ask is, you know, I see you got your material, you know, I see you got your taxes covered, you've got your permit. Where's your money? You know, where are you just going to do this for free, or are you actually going to make a little bit? And it's real common that the great tradesman will forget to put any money in for himself. And it's going to be, you know, I know there's smart guys out there, but you got to put something in for yourself, or you're not going to be in business very long.
Yeah.
And so I would say understand your cost and understand all of your costs and account for it in the pricing of your work.
Okay.
Let me make a comment. I know we're about to close. You have a brochure, and what Ms. Burgess just talked about, the requirements for to do business with the city. This is a brochure that we designed just for contractors. And it's telling you about basically the insurance requirements, the basic insurance items you will need. And she's mentioned 4 of them: commercial general liability, commercial auto, workers' compensation, and umbrella. More likely, if you're gonna do business with the city or any entity, you're gonna need all 4 of those items. And as she just mentioned, so the main thing here is this, you just talking about here, get you a good insurance program. Don't wait until you get a job, and you get that job, and then you let your insurance lapse and all those kind of things. You're not doing yourself any good. First of all, before you start thinking about bonding, get you a good insurance program. And this is just for your education here. Good insurance program will take you a long way. And bonding even further.
They're asking where that is, Mr. Hunt.
That's
That's those things that
It's in that brochure.
And it's on the
And also-
inside. It's on the inside.
Yes, and also you have something about bonding as well, a good bonding program.
Okay, we have,
So
we
use
still
that
have a few more
information.
minutes, we're not finished yet.
I wanted to add one
Yes, I was
thing
gonna let
too.
everybody get it.
I wanted to let you all know too.
I mean, this.
When we require for you all to have insurance, first of all, you should have insurance to protect yourself first. Forget us. Protect yourself. Because if anything goes wrong and you're in business, guess what? You get a claim, you get a lawsuit. And guess what? If you don't carry any insurance, then you're at the mercy. You got a complaint here that you've got to file an answer. So you got to find an attorney, but guess what? The attorney you get probably does not have the experience or knowledge in the field that you have the lawsuit in. So right there, there's more money coming out your pocket. When you carry insurance, you're protected. Your insurance company more than likely will assist you regarding that lawsuit. And I say more than likely because at times there are reservational rights with certain types of claims you have that you may not have coverage, or something you did may have, but just make sure you have coverage, that you report that claim as soon as you get it. Because as soon as you report it, they will handle it if it's covered. And most of the time they are covered, but there are instances where, you know, something filed, there may not be coverage. But I'm just saying, make sure you do, because if so, that insurance company will assist you. They will handle that claim. They will have a list of attorneys that they call that have experience in the field where you have your loss in. So guess what? Right there, you're getting and you don't have to pay a dime out of your pocket. The only thing is sometimes they sue for more than what coverage you have. And so that's why the city of Memphis require at least a minimum of $1 million. Because when people sue, they're not gonna sue you for $100,000. A lot of times they sue you for more than $1 million. But we just think $1 million is fair. You know, in certain type of risk, we say $1 million is fair. So you just wanna make sure, first off, that you're protecting yourself. And that's why we're asking for those coverages, because if something happens to you, you've got to go into your pocket. You know, you can go out of business if you don't carry insurance. So it's just good business, you know, to carry insurance. And like you say, to have you a good agent you have developed a relationship with and you trust them. That's what it's about. And I don't think, you know, if you got that, then they could recommend, just talking with them quite often, they can recommend possibly some added coverage depending on what you're doing. So that's why it's really imperative for you, when you say big, you're going into business, next thing you ought to do right with that, get you some insurance. Don't go into business and think about later on getting some insurance, because guess what? There may be a claim already brewing out there. You've been in business, guess what? When you get that insurance, they don't backdate. They can't go and help you for that one. It's too late for that one. So when you think about having your own business, go ahead with you day one, get you some insurance, adequate insurance. So just want to make sure they were clear on that.
Definitely. Thank you, Mr. Keller and Ms. Burgess. Mr. Powell and Mr. Meredith, closing remarks, please, from both of you.
I've enjoyed myself. I wish you all the best.
What do you want them to remember?
When y'all ready for insurance, I got cards in my pocket.
All right, that's what I'm talking about.
The rest of the guys are good.
Mr. Powell? Closing, what would you like to?
Yeah, well, we thank you for inviting me out today, and it's been fun visiting with you. One thing it's been mentioned here in planning your business and running your business, do look for good advisors. And I would say an insurance agent is a source of advisor. I would also develop a relationship with the bank. The bank, get to know somebody in the bank. You may not be ready to approach the bank, but let the bank know that you're there, that you're a customer. And also develop a relationship with an accountant, and particularly an accountant that knows a little bit about your business. Many times in life you get what you pay for, and the cheapest is not always the best.
I've enjoyed myself. I wish you all the best.
What do you want them to remember?
When y'all ready for insurance, I got cards in my pocket.
All right, that's what I'm talking about.
The rest of the guys are good.
Mr. Powell? Closing, what would you like to?
Yeah, well, we thank you for inviting me out today, and it's been fun visiting with you. One thing it's been mentioned here in planning your business and running your business, do look for good advisors. And I would say an insurance agent is a source of advisor. I would also develop a relationship with the bank. The bank, get to know somebody in the bank. You may not be ready to approach the bank, but let the bank know that you're there, that you're a customer. And also develop a relationship with an accountant, and particularly an accountant that knows a little bit about your business. Many times in life you get what you pay for, and the cheapest is not always the best. So I would look for advisors who have some experience with your business, and you can call them for sound advice.
Does anyone have?
I have one question. Okay, when it comes down to accounting, would you recommend that a person get like 2 accountants? I mean,
Are you
like,
gonna keep 2 sets of books?
I mean, it's not so much as far as 2 sets of books. It's more like,
I know some people are trying to do that.
sometimes you have, maybe that person isn't really that, I mean, they're good as a CPA, but then, you know, like you said, you get what you pay for.
Well, it
But then you
depends
want
on what
more,
you're.
I mean, just like with a lawyer, I mean, you know, you
If
got a
you're looking
lawyer,
for-
and then you, sometimes, I mean, you trust the people that you got around you, but then you wanna just double check behind them to make sure they're
It
doing
means
their
you don't
job.
trust them.
Then you don't trust them. You don't trust
I
them.
mean, I trust them as personal, cause I wanna help them too,
Well,
But I wanna make sure, hey, let's just keep it business, not personal.
Well, I think you could talk to, several people,
Yeah.
and then maybe after you talk to, if you haven't made a decision,
Right.
then after you talk to them, then you make your own decision, which one you feel,
Don't
That's
work,
hopefully
your
if you
company.
have an idea of what you need,
Yeah.
that's some of it too.
Okay.
So you probably need to do some research on your own,
Okay.
just to see what you need, then you start asking those questions and you have an idea of what answer you're looking for.
Okay.
I think that will assist you, but you got it, because you can't go in it blind, because I think they will agree with me, even some agents, they're not always the best agent. That's what he said, develop a relationship on somebody you can count on and that know what they're doing. Because with me being an underwriter, I had some good agents I worked with, and I had some that were not so good. And you want the one that you can count on, that's gonna get you exactly what you need, because you don't wanna look up later on and then you have yourself in the middle of something that could have been prevented.
Yeah, like what happened?
Yeah.
Then they ain't got no answer